What's good, guys? Welcome back to my channel, and today's topic will be top-down analysis, as you have been requesting in last week's video. And today I will show you which timeframes I use for what purpose and how I do my weekly and daily top-down analysis to find high probability trade setups. So what I always use for my bias for trading majors is the XY. So I always start off the week on Sunday by doing my analysis for what my expectations are for the upcoming weekly candle, if it will be an up close candle or a down close candle, so simply the weekly bias of the XY, and then I couple that with the fitting currency. So if I'm bullish, for example, then I want to pair the XY with a weak currency, and if I'm bearish on the XY, I want to couple that with a bullish currency. So I have to pair which you likely will see the biggest expansion in the upcoming week. Before we get into the last weekly candle, I will show you what timeframes I use and what's the purpose of each time frame. So as you can see here, I use mainly a combination of 4 timeframes: the weekly, the daily, then a combination of the H4 and the H1, and then for my entries I use the M15 and the M5. As mentioned, the weekly is for my weekly bias, then the daily I use for my narrative of how the weekly candle, so if it will be a bearish candle, then it will be the open high low close, and if I anticipate a bullish candle, it will be the open low high close. Obviously, the weekly candle consists out of 5 daily candles, so I try to frame a picture of how those 5 daily candles will frame the overall weekly candle. And then according to how those daily candles will create the weekly candle, I will try to then position myself within those daily candles to benefit off of those daily moves, which then end up shaping the weekly candle. Then once we have defined the daily bias, or the narrative according to the weekly candle, I then drop down to the H4 and the H1, and I want to refine my daily key levels into hourly and H4 key levels, which I then use to frame my entries off of. And then for my entries, I use, as mentioned, the M15 and the 5-minute time frame. So now let's start with the weekly candle. That's what I always do each Sunday stream in my Discord. So we go over my expectations for the weekly candle, and then each day I go live and update my weekly bias in the daily stream and give my expectations and my bias, my trade ideas for the upcoming day. And in today's video, we will simply do a quick summary of how I did that in the last week. So now, if we check the weekly chart, then as you can see, we have taken out that yearly buy side. Then we formed now a range here, and in the recent weeks, you could see we had price now retracing. And in the last week, we confirmed this weekly swing high with a lower high here. So the weekly candle closed, meaning we have a weekly swing high here. And also, if you check, we had this up close candle where we closed below. So this candle close also confirms now a bearish order block here. And another important thing to look out for, we also closed below this bullish swing low. So we did not SFP that low, we got a candle body close, which indicates that price wants to continue going lower. And what could be a potential target? Then we have this weekly weak swing low, where we have sell side on the weekly resting below. So the bias or the expectations for next week would be to see price continuing being bearish, and we would expect a weekly bearish bias. So what do we want to look out for? We want to frame a weekly open, high, low, close narrative. And to refine that, we want to use the economic calendar. And how I do that, you can watch my last video. That's where I showed you how I use the economic calendar. Now that we have defined our weekly bias, we want to mark out the weekly PD arrays. We already have this weekly bearish order block. And if you check the buy side, we also have this bullish value gap, which we also close below with the most recent weekly candle. So we now have a weekly inverse value gap here as a key level. So now if we try to anticipate how the weekly candle could form, we could say, okay, we open up the week and then we want to see the weekly high to form somewhere around this inverse value gap, and then we want to see continuation lower into the target, which would be this weekly swing low here. Now that we are done with the weekly analysis, we drop down to the daily chart. We now can refine our weekly levels into daily PD arrays, alright? And as you can see, what do we have here? Aligning with that weekly inverse fair value gap, we also have a daily fair value gap. And now we can use that as a key level where we want to see now the upcoming weekly high to form, and then we want to look for shorts lower into the sell side. Now again, if we take a quick look at the economic calendar for next week, we can see that on USD, the main economic events are placed in the second half of the week, meaning we can expect the first half to act as accumulation and manipulation before we then head over into expansion in the second half of the week. Let's see how the Monday candle will close, and then we can continue with our bias for Tuesday. So as you can see, Monday we had an inside bar of the Friday candle, and pretty much nothing has changed. We still want to see price trading higher to form the weekly high. Then Tuesday, you can see again, we get some retracement. We did close above this minor bearish value gap, which we created on Monday, meaning price likely wants to reach higher into that upper fair value gap, which we outlined in the weekly outlook. So then we have Wednesday, and as you can see, price has tapped now into our daily and weekly key level and also closed outside of it. So now that we are trading at our key level, we can now drop down to the hourly time frames and refine the daily time frame into hourly key levels. So we check the H4, and what we can see here, price initially engineered a week high at the key level. Then we swept that H4 week high. We did close below, so we have an SFP of that week high. And now we want to see if price is willing to expand lower from here. So we can now go to the H1 to again have more insights in the price action. And what we can see here, we had this bullish H1 fair value gap, which led to that manipulation of that high, and price did close below. So now we want to see price using that level, that inverse fair value gap, to expand lower, and then ideally to close below this swing low of that dealing range, and also of that set of fair value gaps which we have seen previously being used to expand higher. Why do we want to see that? We want to see that to confirm institutional sponsorship of price to then see expansion lower, right? So we need that change in order flow to confirm the bias and narrative from that higher time frame key level. Also, what do we want to wait for? We want to wait now for the next day. As mentioned, we do have news on Thursday and Friday, the main news, and then we want to see during a kill zone if price can expand lower. So we had the daily open here, and as you can see, price did expand lower, and now in Asia we continue with that bearish order flow. And as you can see at London Open, we see price closing below that bullish fair value gap. So now we also have another H1 inverse fair value gap, which we can use now as a key level to expect lower prices. So now we have this hourly key level here, and we want to see now price expanding lower from that key level. Also, if you combine that with the Monday range, if you want to know how I use the Monday range, then you can watch my video on the Monday range, but I will mark the Monday range out here now. And what we want to see now is a close back inside the Monday range to then have a high probability to see price expanding into the Monday range low and continue into the higher time frame target, which would be that swing low here. So we closed a back inside on the H1, which is a good sign. Now we have New York open, so we can expect some manipulation at New York open, and then we want to see continuation lower into the Monday range lows. And as you can see, there we go. New York open, we made the high, and then price expanded lower into the Monday range lows and also the previous week's low. Now you can see large expansion today, and as we have anticipated earlier in the video, we expect the first half of the week to be accumulation and manipulation, and then the second half to act as distribution or expansion. And now if you compare how we anticipated the week to play out versus how it actually played out, you can see we had manipulation on Wednesday and accumulation from Monday to Wednesday. Now you can see we had obviously a large expansion, so Friday might be a consolidation as well. But overall, the bias would be to see now continuation into the weekly objective, which would be that swing low outlined from the weekly analysis. So now, as you can see, Friday ended up being a retracement profile. So now, heading into the next week, we want to see a continuation of that bearish order flow into the higher time frame target. And if you want to receive those daily outlooks, how I expect the next daily candle to form, then you can take a look at my Discord, SEN Capital. You can find a link below. And as always, if you learned something in today's video, I would appreciate a like and leave a comment what video you want to see next. And yeah, see you all in the next one.